Hello, welcome everyone. This is another video here on our channel, and in today's video, I'm going to be going over the introduction to the market profile. Now, several times we had talked about volume profiles. We have a lot on our channel about volume profiles, what they are, how they're used, so on and so forth. Now, I'm going to be doing a very similar series in these subsequent videos based on market profile. Now, we're going to be focusing on the market profile in the S&P 500 futures. I'm going to talk about the some differences between a market profile and a volume profile, and the importance of the market profile. So today is going to be an introduction video, and there are going to be videos that do follow in terms of advanced market profile theory and also looking at strategies based on market profiles. Now, a lot of traders out there might be thinking, okay, well, volume profiles, market profiles, what is the difference? Which one might be better? Realistically, the difference is what they're based on, right? A market profile, to simply put it before we start this video, is based on time rather than just sheer volume as a volume profile is. Now, I wouldn't say one is more important than the other. I think both can be used in tandem to find areas to trade distributions and distribution theory, along with order flow principles. So if you're excited to learn all about the market profile, drop a comment down below, hit that like button, and let me know if you like to trade the market profile more than the volume profile or vice versa. So we're going to be focusing on the S&P 500 futures, and let's dive into this presentation right after this intro. So in today's agenda, to understand the market profile, we do have to understand some of the key concepts beforehand. And these are going to be the introductory aspects to what the market profile entails, right? We're going to have to talk about auction theory to begin with. We're going to go through what is the market profile naturally. We're going to go through some basics, some components, and a few different things that might be completely new to you, which are single prints and tails. And then we're going to wrap it up with some examples. So let's dive right into this. Auction theory. Auction theory and market participants, right? Auction theory allows buyers and sellers to come together to sell and buy quantities at their expected prices, right? A market auction is a two-sided auction. It's not like a one-sided auction that you might see at an auction house where there's someone that stands at the front and dictates, right, what the sell and buy prices might be, right? In this auction, in the market auction, right, there's always going to be buyers and sellers that come together, some more aggressive, some more passive, to decide what quote unquote fair prices of assets are, right? This is what moves the markets as buyers and sellers shy away or get more aggressive in their stance, right? They take two different positions. There's areas where buyers would like to get aggressive. There's areas where sellers might get aggressive, and in between, right, either or can let the other kind of take the battle into their respective hands. Now, in terms of market participants, there's two main market participants that we can look at. Right here, we have Jamie Dimon on the left, and on the right, we have her regular retail basement trader. So the longer period traders, they're usually institutional accounts, right? Or just very large accounts. They can be like pension funds, hedge funds, whatever it is, right? They could be desk traders. They could be a lot of different things. The premise is they have massive accounts. Now, these longer period traders, they have levels set out, right? They have their stop set out. Everything is calculated in either portfolio stance or looking for a overall alpha, right, to generate some kind of alpha or to generate some kind of profit. Now, these longer period traders usually are going to be the ones, or will be the ones, that generally move the markets. Now, when they do move these markets, right, they take positions that are strong, large positions. These larger positions are going to be buys or sells at certain areas, right, where they get aggressive or they tend to shy away. And this is what is going to move the market. Now, the shorter period traders, we have to understand that these guys are going to be the retail traders necessarily. They're going to be traders that are looking to scalp or shorter positions, looking at smaller accounts as well. And they're looking to generate some kind of profit out of the market, right? To generate some kind of edge out of the market. These are the traders that would do best looking to follow longer period traders. And market profiles allow us to see how these traders interact, the larger, longer period traders, how they interact and what they deem as fair price and what they deem as unfair price. And us, realistically, if you're watching this video, we're on the right hand side, Mr. Basement Trader over here. We're going to be watching how these periods are reflected in the market profile and how we can generate some kind of alpha from that. Now, what is the market profile, right? The market profile is very, very similar to the volume profile in the way that they both represent a vertical auction in the market. Now, you can see that in the image here on the right-hand side, we have what the market profile is. It's going to be the lettered profile, right? It's created by letters. We're going to talk about those letters soon. Then the volume profile is what we see that's just generally based on volume, right? The volume profile, we use it on a cumulative period. We use it on an individual session. The market profile, we're going to use session by session, regular trading hours and extended trading hours. Market profiles allow traders to read and see two-way auctions. Unlike volume profiles, the market profile is going to be time-based. The market profile allows traders to see how the market structure unfolds and the market movement. So when we have time-based auctions, right, which is going to be the market profile, we see which period sustains the most trading volume, right? So whether it's a certain level that might trade multiple sessions in a row, right? Multiple periods in a row, which will create a distribution, or if it's one period that's been traded in numerous areas. So if this confuses you, just wait. We're gonna dive right into this. With the market profile and this understanding, what we're going to be doing is starting to develop an understanding of market directionality as we can with the volume profile as well. So what's the market profile, right? Volume profiles and market profiles are very similar, where we will look for large distribution blocks, critical distribution blocks, which are large areas of market activity and the ledgers that surround those. So our distribution blocks, if you remember from our volume profile videos, they are areas where we have a lot of volume that is clustered together, right? We have these areas that create these bellies, and on either end are going to be ledges, which are low volume areas. Now, the lower volume areas are areas where traders would ideally get more active. You can see here on the market profile as well. These ledges are where traders would like to get more active, because when we think about distributions, yes, okay, volume is going to attract price, but volume gets very sticky, and price is very sticky in large volume areas, meaning that there could be a lot of whipsawing, chop, and whatnot. It's better off looking at areas where you can see a volume drop off in thinner areas where traders get more active on the longer term side. We want to start thinking like those longer term traders, those strong-handed traders, those strong-handed buyers or sellers. We're going to be looking at the market profile that creates balances and imbalances like we did in our volume profile video, right? A distribution, as we can break down just very simply here, a distribution is like a normally distributed bell curve here, right? You have the majority of the volume that sits in the middle, but generally volume profiles and market profiles might have several of these, right? Areas that are outside are going to be imbalanced, where markets flow fairly quickly and easily through those, and the larger blocks are going to be our balances. So in terms of the market profile, right, a visual, I use Sierra charts as the main market profile platform. I honestly don't really know where else you can get a market profile other than futures trading platforms like Sierra charts. You can get one, probably TradingView realistically if you look for one. But if you're going to be trading on this, I would say Sierra charts or like NinjaTrader or whatever. But I do use Sierra charts, and these are going to be our market profiles, right? Each market profile each session is denoted by letters. You can see the lighter here is the extended hours trading session. The darker one is going to be the regular trading hour session. And each of these market profiles is paired with a volume profile for the session, which is great, right? We also have this cumulative volume profile that allows us to see distributions very easily, right? If you're confused on distributions, go watch some of the older volume profile videos, but a distribution generally is going to be a belly where multiple high volume nodes do come together, and each of the ends of this is going to be a ledge, right? So we can look at market profiles and find distributions within those as well that can serve as balanced areas. Now, some of the market profile basics, right? Let's dive into this step by step. First of all, time, right? The main aspect of the market profile that dictates how price is formed in relation to market participants, buyers and sellers, how they interact, right, is going to be time. So each period is denoted by a letter, right, that represents a 30-minute block. So volume, this is the measure of how well the interactions between buyers and sellers actually hold. Where is the accumulation of volume, right? These are areas where we have multiple periods that might trade a single level, right? That is what tells us there's an accumulation of volume, right, of interest at those certain areas. This is where market profiles and volume profiles are very similar. However, the volume on the market profile is based on how long the level is traded at, right? How long price stays at that level rather than just general contracted volume. Market profile components. This is where we dive deeper into this. The time price opportunity, right? This is the periods that we have talked about, which again, we'll dive into. We have the point of control, the POC. Same thing as the volume profile. And then we have value areas. We have value areas, highs and lows. So the time price opportunity, we finally come into this. Every market profile has a mixture of letters, right? These letters are periods, right? Each regular trading hour session starts with the A period. Each time price trades at that level, right, within that period, a letter is recorded. So for example, A, right, we're going to start with A. A is going to be the first 30-minute period of the market profile, the time price opportunity. So it's going to be a 30-minute, so 9:30 a.m. to 10 a.m. Eastern time is going to represent A. Every time a level trades in that time period, it's going to be denoted by an A in the market profile. Now, the next is going to be B, so on and so forth, right? B, C, D, E, blah, blah, blah. So when the next 30-minute period trades, right, B, you're going to denote every price that trades within that time zone as a B. Now, when these areas, when these levels stack up, right, when one level trades every single period, let's say, you're going to get the letters that stack up one after the other, right? You can see here A, B, C, D, E, F, G, H, right, in this period. So this area at 91.25 in this example is the level that trades the most volume, which is going to be our point of control, the most traded area. Now, A and B period are what we call the initial balance. The initial balance is going to be the first hour of the trading session, right? And the initial balance is going to have a range naturally. Everything in A and B period is what we would call the initial balance. And this is important. We're going to go through this in a bit. This initial balance, right, we should understand where it is and where the tops and bottoms are, because what comes after that initial balance can be what we call unfair highs and lows. Now, the market profile, just like a volume profile, has a fair balance, which is going to be the general value area, and then it has unfair highs and unfair lows as well. The point of control is going to be the fairest value in the profile, right? It's going to be the most voluminous, the thickest area of the profile. In the market profile, it's the area that's been traded the most naturally. This is where the most letters stack up, right? Where you have the longest span of letters, and it's always going to be in the value area. The single most volume in a session, the single most time spent in a session. The value area, right? This is 70% of all volume is traded in this area, the first standard deviation. In distribution theory, we should understand that the balance should hold. This is the theory that has been explained many times in the volume profile videos, but the value area in the market profile and Sierra charts is denoted by this yellow area, right? You can change the color to whatever you want, but everything outside of the value area is in gray, right? You can see here in this example, it's in yellow. Now, this is what we call balance, right? This is what we call the balance of the market. It's not the initial balance. It is just the regular balance where the majority of that 70% trades based on the market. Now, when prices exceed these areas, whether it's to the upside or the downside, you can see here, prices tend to come back into balance when they're deemed to be unfair value, right? Now, what can we define as unfair value, right? Unfair value usually dictates emotional buying or emotional selling where traders get stuck. So generally, when we get into unfair areas, right, we're going to talk about how to identify those, but when we get into unfair areas, this comes outside of the regular balance. So traders naturally would look for prices to come back into the balance, whether you trade the break and retest of the balance or whatever it is. Now, we're going to talk about a way to find these unfair areas so you don't have to guess as to what is going on and if price will return to balance or will we continue. Like I said, if price escapes, we expect to rebalance. Profiles won't be normally distributed. This is one thing that we have to understand, especially with volume profiles as well. A normal distribution, remember, is going to be a regular bell curve that offers us a just 70%, the standard deviations, right? You get the first standard deviation here, you have your mean, and everything in here is about 70%, right? And it's even, right? It's very even. Now, these volume profiles, market profiles, not every single session profile is going to look like this, right? A lot of them have multiple distributions, have multiple different shapes, And we have to understand that. We have to understand where those distributions are, right? We have to look within that profile to find those areas and break them down. We have to find those bellies. Now, find areas where price would want to accept and reject as well, meaning that if we have very large distribution blocks within, if we have multiple within a value area, we'll want to deem which one is going to be the largest, right? The most important, especially in market profiles. They're very, very easy to identify and distinct, right? You can see right here, for example, we have two main distributions in this overall market profile. Now, within the value area, very easy. We have the top, and then outside we have the bottom. Very simple, right? Market profiles really, really break this down in a simple step for us, rather than with volume profiles where it can get a little difficult, right? If we take a look at this volume profile, for example, you can see here we have one here, we have one here. Market profile, very simple, one, right? One here, two, three, right? One in the market profile. So it's very, very good for identifying that. Market profile tails. A market profile tail is how we identify our unfair value on a single session. It is the excess high or low. Now, a tail, it's when the market profile itself prints these individual printed periods on each end of the profile itself, so the upside or the downside. These individual printed periods, right, they're single printed periods, and they are areas of very low interest. Price gets from high interest to low interest, right? These are going to be deemed as unfair areas. This is what happens when emotional buying or selling comes into the market. When we have an unfair high at the top, this is what we call a tail. This is emotional buying that runs into the top, and this becomes a seller's top, right? This emotional buying comes in and it pops price up on weaker volume. And what happens is generally buy side, right? They rebid. And at one point, no one wants to rebid, and the sellers take advantage of that. Now, these excess areas are areas that do swing realistically back into the balance area. Now, how do we find that is a totally different thing, but generally traders can wait to see if price actually comes back into the balance, which if we say that the balance is the period at which these single prints start, right? So that would be here. Anything under here, we would be quote unquote reverting back to balance the break and retest. That would generate a decent amount of opportunity and profitability. Now, these single prints, there's one caveat. They have to happen outside of the initial balance. That means periods after A and B, right? So that means C period and on. Otherwise, we can't use A and B as our tail we can't use A or B as our trend. We can't use A or B as our tail identification. So this is what we would call an aggressive mean reversion, where we have this unfair supply or demand, and there's no active traders that want this. And then strong-handed buyers or sellers actually come into the market and revert price back to what the balance is or to the mean. Single prints, right? They're very similar to tails in that they're as well single period prints, right? But they find themselves within profiles themselves, right? And they divide distribution. So they're ledges pretty much. A single print is denoted by this dotted line in Sierra charts based on this TPO chart, right? Based on this market profile chart. They're going to be single prints within the actual profile, not found at the heads not found at the tails of either end. Rather, they're going to be somewhere inside, and you can see they divide these distributions, meaning that they're ledges for price. So that would mean that they are support resistance areas for price. When price comes into them, we can use these as support resistance, whether it's intraday, the prior session, right? And these are also emotional traders that manage to push price down or up. So these single prints, right? When in this example, price closes this period down into this area, and it creates two single prints like this, right? And this would suggest that these two areas, right, this is a key resistance for price to reject and pull down, which is exactly what happened at the ledge of this large distribution. So this is about one of many examples on how to use market profiles. And of course, we're going to be talking about strategies and whatnot in the coming market profile videos. So I want you guys to go smash that like button if you're interested in understanding exactly how these work. So let's talk about an example, right, and a trading plan. Let's use this profile. What we're looking at right here is a slightly different profile than what I've shown you before, right? And this in the turquoise green is going to be our extended hours trading session, right? This is our regular hours trading session. There's a lot that's happening in this, right? You have single prints, You have a tail from the overnight session. You have what is large volume, right? These different colors, the closer they are to blue, they denote large volume in relation to the POC outside of the value area, right? That's a very quick description. We talk a lot about this at TRADEPRO Academy, but you have a lot of volume down here, right? You have this tail going into the regular trading hour session. You have a big distribution block here, right? We can create a very, very simple plan from this. So what this suggests is that there are stuck traders accumulating at the lows. The lot of volume over here suggests that there is strong-handed buying, which are longer-term Jamie Dimon traders are coming in at these lows with these stuck traders at these tails, right? A lot of volume here. We're also at the bottom of a large distribution at 4,100, meaning into this area, realistically, we're expecting some kind of a rally, right? You also have a large drop in a short period of time before the market opened for the regular trading hour session. This would suggest that there's a very high possibility of profit taking and buy stop runs into some of these single prints, which are not only going to be targets, but they can be slight reversal areas. You can see right around the single print to single print prints on the regular trading hour session. Well, how did this play out? We have this key area right here. We can say, okay, down into this 03, we can look for some buy side. Comes down, holds, right? Rotates this area very, very well for that continuation to the upside. Not only did we get a very strong pop, right, based on all of our analysis here, but we also held out that single print for a slight little retest before we continued to the upside. So this was the general breakdown that I wanted to share with you guys for the market profile as an introductory video. What we're going to be doing next time is going through some advanced concepts in terms of shapes of market profiles. And then after that, we're going to be going through some examples of strategies based on market profiles, one of my favorite strategies. So today, what we had learned from the market profiles is what they are, what the periods look like, right? How we should look to understand and read the market profile based on periodicity, as well as some of the main concepts that we understand, right? The value area, how balance works in a market profile, how tails and single prints with emotional traders work in market profile, and how you can create a plan just using the extended hours trading session for the coming regular trading hours session. So if you guys are excited about that, what we're going to be doing is doing a sneak peek live stream of some of the core concepts of our new futures course on YouTube. That is, we're going to be doing this late April. So if you guys are excited for that, keep an eye out on your emails, right? You can go to TRADEPRO Academy to get access to said emails. And the new futures order flow course, right, where we go through market structure, volume profiles, order flows on DOMs, trading strategies, and risk management. Now, here's what the room has to say about this, right? Amazing new course that is out. I'm not trying to pump my own tires here, but this is how we trade the futures market. This is how the futures market has been traded for a very, very long time, combining the concepts of profiles and the depth of market to give you a real understanding of what's actually happening behind the scenes with market participants and how they're supposed to react to form directionality. So if you want to understand those core concepts more, I'm not saying jump in, right, buy this course right now. Check out this coming breakdown and live stream of the core concepts of our futures course, and I hope to see you guys there. And I hope to see you guys in our trading room. So I'll see you guys next time. Remember, hit that like button, hit that subscribe button, and we'll drop the next market profile video very, very soon. Thanks for watching, and take care.